This trade forced me to test something that sounds simple, but it's actually really hard for me to do once I'm in a trade. And that's to wait, because in this trade, price almost took a full day before it made its final move. My name is Vi. I document my journey to consistent profitability, wins, and mistakes included. Now, coming into this trade, the bias was very clear. The hardest part for me wasn't finding the trade. It was letting the trade play out without interfering. Let's jump into the chart. Now we've moved price back to right before New York open. From a structure perspective, we can see that we have a swing low down here and have broken structure to the upside by taking out this high and creating a new high right here. And so we're bullish, meaning we're going to look for longs. Now price has already started to retrace down into the lick, but I'm not interested in taking any trades until we take out this low and enter this key point of interest, because this is where price made its initial move to take out this high. And so this buy to sell candle and all the displacement above it is what I want to see mitigated by price before I look for any longs. Now around 11 o'clock, price finally mitigates my point of interest, at which point I can drop down to the 1 minute. Here on the 1 minute, I'm looking for a significant supply zone to be overrun by demand. I can see that there is somewhat of a supply zone here created that demand clearly takes over. But for me, it's not convincing enough. What I mean is that the supply zone is very choppy going down. You can see a lot of rejection wicks going in both directions, which tells me there's a lot of uncertainty from these sellers down here. And so for buyers to overrun that area doesn't tell me much, because they'd overrun what I think is a weak supply zone. So I'm going to let this play out further. If price moves up without me, I'm fine, because I didn't want to jump into a trade prematurely. A few minutes later, another supply zone is created by that very move we just talked about. Price had moved down and closed below this low. You can see that there are a few less wicks there. There's more displacement that's also given. And the move up by demand is more consistent than the previous one. This move up was characterized by 2 candles, whereas this move up was characterized by more than that, including some fair value gaps. To me, this is a stronger display of demand overrunning supply. And so I want to jump to the 5 minute to see if I can get an entry. Here on the 5 minute, we have a nice fair value gap that I can target for an entry. I can place my entry at the fair value gap, stops under the low, and ultimately target New York session high as my final take profit. I can also take partials along the way. After initial move up, price retraces down and tags me in. By the end of New York session, price is essentially just chopped around my entry zone. But since this is a Forex trade, I can leave it on overnight. The question is, where do I move my stops in a place that makes sense but doesn't run the risk of tagging me out prematurely? For me, it's this low right here. If this low gets run, then there's a chance that price will just continue its move down and eventually stop me out. So for me, that makes sense as to why I want to place my stops just under that low. If price wants to come back to my entry level to collect more liquidity before the move up, then that's fine. I don't want to get prematurely tagged out. And so that's where I would decide to put my stops overnight when I'm not at my desk checking in on price constantly. Let's play price out to see what happens. Just as New York session starts to open up for early morning trading, price jumps up and hits my take profit. If we look back, we can see that when markets opened up again around 6 p.m. Eastern, price came back to collect more liquidity right at my entry level and then continued to move up during Asia session before chopping around quite a bit. Of course, this wouldn't have mattered to me since I would have been asleep on the East Coast. That would have given me an opportunity to not get in my own way and potentially close the trade early. The real win here wasn't the profit. It was the patience on the entry as well as letting the trade play out. Because the easiest mistake for me to make is interfering in a trade that's working. This time, I let price play out and it worked in my favor. I'm not a guru. I'm just documenting my journey towards consistent profitability using market structure, supply demand, and price action analysis. If you're on the same path, then subscribe and let's keep sharpening our edge together. If breakdowns like this help you see the markets differently, then check out this next video right here where I go through another backtesting example. I'll see you there.